In continuation of the previous lectures, we were studying the capital allowances. Actually, if we zoom out a little bit more, we are studying the income tax calculation. And in the income tax, we are studying the trading profit calculation, the tax adjusted trading profit. In that, we just studied in the last class that we will make some four adjustments. And then after those adjustments, we shall deduct one expense which is known as capital allowances. So this is in lieu of depreciation. Depreciation is added back because tax authorities do not agree with the method which we use to calculate depreciation. Okay? And here you can see altogether the method is different. They are giving us the capital allowances based on different values and etc. So among those capital allowances, we discussed in last class that there are four types of allowances. One is the first year allowance, which is only available on the new cars which are having zero CO2 emission rate. Then we have annual investment allowance. Any investment in plant and machinery up to £1 million is claimed as annual investment allowance, and any remaining amount is added to the main pool or the special rate pool, depending upon the item relates to main pool or special rate pool. We'll discuss which items relates to special rate pool, which items are private use, which items are short life asset. Any item which does not fall in all these three categories is actually part of the. But generally, let me tell you, in the main pool, normally we'll study that as well. Main pool, there are some cars and some plant and machinery is included in the main pool. So we discussed these 3 points in the main pool, that most qualifying expenditure uh, in the plant and machinery. This was the point last time studied. Most qualifying expenditure on plant and machinery is added to the main pool. Then additions will increase the pool, deduction will reduce the pool, and we will charge 18% written down allowance on the value of the pool. So continue with this main pool heading, and the next point, please write this one. We practice this as well. The cars with CO2 emission between 1 gram and 50 gram added to main pool. Then written down allowance is time apportion. We discussed it's an annual limit. We will time apportion it. And the main pool is £1,000. I told you the small pool WDA as well. If the pool balance is £1,000 or less, it is not charged 18%. Straight away, the whole amount is calculated as allowance. We call it the balancing allowance. If it is a positive, if it is a negative, we will call it balancing charge. But normally in the pool, it's a positive. So we will call it a small pool WDA. Okay, balancing charge is a negative figure. Normally, we will discuss that later. This is something which we call small pool WDA. Any value of the pool which is equal to £1,000 or less, we will charge the whole amount as capital allowances. So continuing the main pool, let's discuss one example. ABC company has the following transaction in the year 31st December 2021. Uh, did we discuss this example in the last class or no? Zero new to emission purchase delivery van, 300 purchase plant. I think we discussed it. Yeah, we discussed this example in the previous lecture as well. Yes. So let's move ahead. Now the heading is special rate capital allowances. We are continuing capital allowances, but the heading is special rate pool. So please give the heading special rate pool. So this is the first point. Please write this point and then we will discuss it. Okay, it says expenditure on cars with CO2 emission of more than 50 grams. CO2 emission of more than 50 grams. These are included in special rate. So one is the car. It means if we discuss about now car, low emission or zero emission car is charged to the first year allowance. It is not included in it. Straight away, the whole amount is treated as allowance. Any car in between above from 1 to 50, it is included in main pool. It is included straight away main pool. Okay? And any car which is having a CO2 emission rate of more than 50 gram, it is included in special rate. Clear? Means we will charge only 6% WDA on this because special rate pool we charge 6% written down allowance. Second, assets with which are integral part of the building like thermal installation, escalators, lifts, firefighting equipment. These are the examples of the assets which are integral part of the building. These are not building, but attached part of the building. Just like this ducting is done, thermal insulation. These are included in special rate. Okay? Remember, we do not claim capital allowances on buildings. Buildings, for that we have a different allowance. We'll discuss that is industrial building allowance, or sorry, structural building allowance. We call it SBA, structural building allowance. So, but the integral features of the building, they are part of this special rate pool, and we will claim capital allowances on. Next, third item, which is long life assets. So we'll discuss what those long life assets are. These are the assets which are included in special rate pool. So next point, please write all plant and machinery qualifies for annual investment allowance. Now whether that is part of special rate pool or the main pool, all the plant and machinery qualifies for annual investment allowance. Next point, cars never qualify for A. Already discussed, regardless of any type of the car never qualifies for annual investment allowance. Now, you see, we have discussed that annual investment allowance is available on the main pool. It is available for the items of the special rate pool. It is available on the plant and machinery. It might be available on some short life asset we discussed. So the question is, how do we allocate annual investment allowance? Means the priority of the allocation of annual investment allowance. The common sense says that any asset which are relieved in longer period of time, we should claim them against AIA to claim the relief as early as possible. Capital allowance is what? It is a relief. It will be deducted from profit. Our profit will be reduced means our tax will be reduced. So we should try to claim as much capital allowances as possible. So as much as possible means we should try to claim AIA on those assets. For example, if I talk about special rate, so special rate, sorry, special rate pool asset, uh, we can claim only 6% allowance. So it means, and that is also on written down value. So it means it will take almost more than 12 years to even if we take 6%, so almost more than 14 years even more because it is on reducing balance sheet. It is on more than, it will take more than 14, 15, 16 years that we will be able to claim the whole asset as an expense. On the other hand, if we will claim it against AIA, so we can claim the whole amount at once. So it's better that we should charge the annual investment amount in certain order. So what that order should be, please write. AIA limit should be allocated in the following order. First, against special rate pool. Second, main pool. Third, private use asset. Then on the fourth, short life asset. This, prioritization, this order will maximize our capital allowances claim because special rate pools are relieved at 6%. Instead of going at 6%, we will try to claim as much expense as possible against AIA in the year of purchase. So if whatever is left, if for example, if the investment is more than 1 million, definitely that will be not relieved against AIA. So that will we can continue at 6%. But if we claim AIA against, for example, the main pool first, so it means the majority of the allowance, majority of the amount will be covered against AIA, against main pool. So special rate pool item may have to now be added into main special rate pool and they will only be relieved at 6%. So, but it only is applied if we have the total investment of more than 1 million. For example, if investment in main pool and special rate pool and in private use asset or short life asset, all the investment is below 1 million. It doesn't matter that which order you all the expense will be relieved against the AIA. Then the order does not matter. Order will matter if the investment is more than 1 million because we have to decide that which item should be there against if even if we don't claim AIA, it's okay. We can still claim their expense at the earliest, just like short life asset. So we have kept the short life asset at the last. Why? Because short life asset will study that any asset whose life is 8 years. So maximum 8 years. So regardless you claim AIA or not, even then the asset is to be eliminated within 8 years time. And another aspect of this is if we sell this short life asset, in that case we can still claim all the allowance. We'll discuss that later, the selling portion. So this should be the order to allocate AIA if there are multiple items which are purchased in a current year. So next is the long life assets. So let's discuss what the long life assets are because we discussed that long life assets are included in special rate pool.
Sir,
Yes,
before we start, normally cars are added in which pool? Like not zero emission cars, like normal carbon use
there are three
cars.
types of cars. We categorize the cars into three categories. One, zero emission. Two, 1 to 50 emission. Three, above 50 emission. Okay. Zero emission claim for first year allowance. 1 to 50 emission, they are included in main pool, provided there is no private use. Because let me tell you, if there is any private use of any asset, it will have its own column. Like we already have studied that there is a column of private use asset. Okay. So we are assuming that there are no private use. If there is no private use, then zero emission car will claim first year allowance against that. 1 to 50 emission, year 2 emission will include those in main pool, and above 50 will be included in special rate. Got it?
Yes, sir.
Okay, long life assets. So please write this long life assets definition. Long life assets are assets with a useful life of 25 years or more. Second, please write this point and I'll explain this. Now, these are the two requirements of long life assets. Both should be there. Even if one requirement is not met, we will not categorize it as a long life asset. First requirement is that the life is more than 25 years or even 25, and the purchase cost within 1 year, but including purchase cost or any investment which we have made on this asset, should be more than 100,000 pounds. Okay. For example, if the accounting period is 9 months, so this 100,000 pound is apportioned according to 9 months. This is an annual limit. Okay. For example, if the accounting period was 9 months, so it means this limit would be 75,000 pound, I guess. So it means any asset who has a life of 30 years, let's suppose, and the purchase cost is more than 75, it will be considered as long life. Okay, in that case, 100,000 will not apply because the 100,000 is annual limit. But the accounting year is for 12 months, then any asset whose cost or any capital expenditure, including all capital expenditure, exceeds 100,000 or it is 100, and the life is 25 or above. Both conditions are met, we'll call it a long life. If the asset has a life of 30 years, but the cost is 20,000, it's not a long life. If the asset's cost is 200,000, but the life is 20 years, again, it is not a long life. Any asset which is not long life, it will be part of main, not special rate pool. So we will charge 6% on special rate pool. WDA is charged at the rate of 6% on special rate pool. So let's discuss this example to understand the concept of this special rate pool further. Okay, it says Adam make up accounts for 30th September each year. First, the tax written down value of his plant and machinery on 1st October 20 were as follows. Main pool, special rate pool. During the year 30th September, following acquisitions were made. New car, CO2 with zero CO2 emission, and machinery, 107,000, and crane, 138,000. Expected life, 30 years, so it is considered as long life asset. Car CO2 emission of 67, so this is above 50, again part of the special rate pool. Air conditioning system, integral part of the building, again part of the that special rate pool. So let's calculate the capital allowance. So can you calculate that? So let's try it, then we'll discuss. Okay. For the answer, you see, as I told you, that first you have to make AIA column, then make an FYA column according to the question. We need a main pool column, then we need a special rate pool column, then capital allowances column. Okay. First of all, we will write tax written down value brought forward, and only the brought forward values are for the main pool and the special rate pool, because these are the allowances, these will be claimed for the year. So what is the opening balance for the main pool? Sorry, 32,300, and for special rate pool 103,000. So these are the opening balances. Okay, so let's first go for is there any zero emission car purchase? 18,000. So let's go first for the new zero emission car. So that was purchased for 18,000. Simply write under the FYA and then claim first year allowance 100%. 18,000, I will claim it as allowance, nothing balance. So the whole amount is written under the allowance column. Done. Then we purchased uh, some machinery as well, which qualify for AIA. Then we purchase some SRP special rate pool items as well, which qualify for AIA. So first, let's add special rate pools which qualify for AIA, which is first one is the crane. So the value of crane is 138, 138,000, right under it AIA. Then we have air conditioning, 87,000. Okay. So we can straight away write the, you know, the machinery as well, because we know the total amount is less than 1 million. So simply continue to add the main pool items of this as well, which is a machinery. So machinery value is 107,000. So this is the total amount which we will claim as AIA. How much? So 332,000 we will claim the whole amount as annual investment allowance. Nothing will be left. So write this 332,000 under capital allowances column. Okay. Then we purchased anything else? Car, high emission car. High emission car. Okay. So that is high emission car, or you can call it the car with higher emission of 50 gram, more than 50 gram. So this is part of the main pool. How much is the value of the main car? 17,000. So we will straight away add it into 17,400. We will add it into special rate pool. Okay. Anything else purchased or sold? Nothing. Now we will charge the WDA at these columns. So the total value for this is 32,300. The total value of this column is 120,400. Okay. So we will charge WDA. Remember, WDA 18% is charged at this 32,300, 18%. 5814. So we will write this 5814 in allowance column, and WDA 6% is charged on this special rate pool. 7224. So we will write this 7224 in the allowance column as well. After that, these amount is called tax written down value carried forward. So whatever the value of this pool is, again, whatever it is called tax written down value carries forward. 12400 minus 7224 is the tax written down carried forward for the special rate pool. And we will add all these allowances. This is the amount of capital allowances which we will deduct from our profit. Any doubt, Rafi, now? Please ask. It's the same procedure as we have already studied, we have already discussed.
What is the allowance we charge for main pool? 16%?
18%. No, we have already written that. We forgot. 18%.
Okay, sorry, 18%.
Yes. Main pool, I have written this as well. Main pool allowance is 18%.
Main pool. So, whatever the allowance that is charged in special rate pool, that is all added to the allowance column.
Whatever the allowance you charge, it's not that whatever the allowance you charge on special rate. Whatever the allowance we charge, we will continue to add that into allowances column. We charge first year allowance, we added that into allowance. We charge annual investment allowance, we added that into annual investment allowance. We charge written down allowance, we added those written down allowance into the allowances
Okay.
column. Whatever the allowance we will charge, we will claim, we will include that into allowances column. Continue with The next heading, which is balancing charge or balancing allowance. Balancing charge or balancing allowance. So please write under this heading the first point. If the disposal value exceeds the pool value, then the excess is called balancing charge. Self-explanatory point. Whenever, because we discussed that in any pool, first is opening balance, then there are additions after AIA, or then there are straightforward addition if there are. After that, we will reduce the disposal, and less than cost or sales price, we will reduce that. So any amount which is left, if it is a positive, we will claim it allowance. If it is negative, we will claim it as a charge, balancing charge. We'll practice one example for that as well. The next point, please write, if it is effectively treated as negative allowance or depreciation. We're talking about balancing charge. Next point, please write, then I'll explain. If the disposal value of a pool is less than the pool value, then the balance is called balancing allowance, which is then transferred to the allowance. The disposal value of the pool means, we call it, if the pool value is 10,000 and the disposal is 3,000. Okay? So the remaining amount is called balancing allowance. Okay? This is when the business is closed. Remember, normally any balance of the pool, we don't claim it as a balancing allowance. We charge WDA at 18% or 6% on that balance. But if it is the last year of the business is being closed, so that whole amount is considered as balancing allowance. If the pool balance was 10,000, but the disposal value is 13,000, so it means it would be negative 3,000. So this negative 3,000 is called balancing charge. It will be treated as a negative figure in allowance column. Just like we add any allowance in the allowance column, we will deduct this balancing charge in the allowance column. Okay. Simply, if it is a negative figure, it is treated as negative figure. That's point. The balancing allowance on the main pool and special rate pool is only available in the last year of trade. Otherwise, we depreciate the pool in normal way.
Could you explain this last point? The balancing allowance on
Write this
main.
first, write this, then I will explain.
Okay.
So the last point is again, which I explained, that the balancing allowance on main pool. For example, we are talking about the balancing allowance on the main pool or on special rate pool. Balancing allowance will only occur if it is the last year of the. Otherwise, it will not be called as balancing allowance. It is a balance on which you will charge WDA, written down allowance. Okay? Balancing allowance is a separate balance, just like a written down allowance. But the written down allowance is 18%. Balancing allowance is the whole amount. Whatever the amount of the balance is on that column, claim the whole amount as balance. So this, it says that on any pool, remember we are talking about different columns. There are two pool columns and two other columns, one short life asset and one private use asset. We are only talking about pool columns. On short life asset or on private use asset, any disposal will result in balancing allowance or a balancing charge. Because every short life asset has its own column. It's not like that there are 10 short life assets and we will add all short life assets in one column as short life asset. No, it will be again called a pool. So for short life asset and private use asset, we don't make a pool. If there are 10 short life assets, we'll have 10 different columns. Short life asset 1, short life asset 2, short life asset 3. Each asset will have its own column. Same like if we have 5 cars which have private use, we'll have 5 columns of each car. We'll write its own cost, its own disposal. So it means whenever any private use asset or short life asset is disposed, it will have a balancing allowance or balancing charge automatically. But on the pool, as in pool, there is not a single item. Multiple items are pooled together. So any disposal will not result in balancing allowance or balancing charge. Whatever you will dispose, there will be a balance on the pool, and we will charge either if the balance is 1,000 pound or less, we will claim as small pool allowance the whole amount. If balance is more than 1,000 pound, we will charge WDA at 6% or 18%. But if it is the last year of the trade, then no WDA 18 or 6. The whole amount is considered as allowance. If it is a positive, it will be balancing allowance. If it is a negative, it will be balancing charge. But balancing allowance on the pool only happens in the last year of trade. This is the last point. Rafi, got it now?
Yes, sir. The balancing charge or allowance only happens in the last rate of pool if the balancing figure is negative or positive.
Yes.
If po
In the
if
last year of
positive,
trade. In the last
yeah,
year of trade. We are talking about in the last year of trade. That's it.
yes, sir. Perfect.
Otherwise, pool never gives you balancing allowance.
So last year of trade meaning like uh, the business is going to shut down.
It is self-explanatory, definitely. Last year of trade means last year of trade. The business is
Ah,
going to close down.
yeah, but because normally there's this concept, yeah, like we do not say the business will run indefinitely. We do not say that it is going to shut down. So this
But
is in like
still,
unfortunate
still,
circumstances.
still, still, any year can be the last year. This is what you
Yeah,
are talking about going concern concept. But it's not necessary that business continue for the unlimited period.
Yeah, it will shut down at
What if you
some point
decide,
of time.
what if you decide, okay, this year I'll be closing it down. So that will consider it as last year. Done. Story ends.
Okay, okay. Yes, sir.
Next heading, private use asset. I have not practiced that example. We'll now practice one comprehensive example for that, in which everything will be included. Then you will understand that what is the treatment of each item. So please write this under private use asset. Assets with some private use by the owner are not added to into any pool. Please write next point as well. It says assets with some private use by owner not added into any pool means they have its own column. Each private use asset is depreciated separately in its own dedicated column. This is what I already told you. Next point. These assets are depreciated normally, but the only business use one D is it. After only there is no D, but the only business use percentage is transferred to the allowance column. Private use asset means any, normally these are the car. You will get an example of the car. So if there is a column of private use asset, you will be given a percentage of the private use. So the capital allowances will only claim for the business usage because capital allowances is a business section. Any private use will not claim for capital allowances. We'll practice this in an example. Right, next point. At disposal, the whole balance is transferred to allowance column as balancing allowance or balancing charge. So this is self-explanatory again. I already explained that whenever you will dispose the asset, any amount which is left after disposal is either balancing allowance or balancing charge. There is no closing balance of such assets or there is no WDA will be claimed if the asset is sold. Because every asset has its own column. Once it is sold, it is gone. It will be treated as balancing allowance or balancing charge. So next, please give heading short life assets. As I told you, we'll discuss one comprehensive example. Before that, continue write the rules, and then we'll apply those rules on that comprehensive example, and we'll discuss those. Short life assets. So this is the definition of short life assets. Assets which are expected to be sold within 8 years can be depooled. Means will not include that into pool. Each short life asset is depreciated separately in its dedicated column, just like the private use we already discussed.
Sir, a car can be considered short life asset? Sir,
Does does car have the life of less than 8 years?
yes, maybe, like depending on the owner's choice.
Yes. No, no, we are talking about the useful life, not the life which you have. Normally, you can see that the cars having, uh, there are so many cars of 2001, 2000, 2002, 3, 4. They are running on the road still. Even before that, so many cars. So if we talk about 8 years, so it means now 2023. So it means we should not be seeing any car before 2015. But almost more than 90% cars on the roads are before 2015. So how you can consider the car as a short life?
Okay, so like
Car is not considered as short life.
these are like assets by the definition they mean is like by 8 years their use is done. It cannot be
Yes.
used or it's
Life
not
of the asset
salvageable.
is 8 years. Life of overall life of asset is 8 years. Right?
Yes, sir.
If, for example, after 8 years, you estimated that the life will be 8 years, but actually the life becomes more than 8 years. After 8 years, the asset will be transferred to the respective pool. Either it is short rate or special rate or the other pool. It depends on which asset. But normally in exam, you will be told that whether the asset is short life or not. You don't have to identify whether asset would be short life or not. Clear? It is clearly written in the question that company purchased this amount of short life asset or sold the short life asset. The name will be short life. Got it?
Yes, sir.
Next, short life assets are depreciated normally at 18% because mostly they relate to main pool. Because if you know if it's a long life asset, it will be special rate. So normally these assets are part of the main pool, short life assets. Next point, please write. If asset is sold within 8 years from the end of first accounting period, the whole balance is transferred to allowance column as balancing allowance or balancing charge. This is what we already discussed. Whenever an asset is sold, the balance is transferred to the allowance column as a balancing allowance or balancing charge. Please write next point. If the asset is not sold within 8 years, it is added back to main. We already discussed this one. And after that, please write the answer to the question of Rafi. Cars do not qualify to be treated as short life assets. Even tax authorities have said that cars cannot be considered as short life assets. Normally, for example, you have purchased some software whose life is licensed for 2 years, 3 years, for 4 years. After 4 years, its life will be expired. The software key will be expired. So these are called the short life assets. Cars do not qualify to be treated as short life assets. Okay. So next, please give heading final accounting period. We are still discussing the capital allowances, but what are the capital allowances in the last accounting period? We call the final accounting period. Right, first point. There is no AIA, FYA, and WDA available in the final accounting period. And in last period, we do not charge any of these allowances. Is right, next point. After the disposal, after addition and disposal, the whole balance is treated as balancing allowance or balancing charge. Then, okay, let's practice one example, which is actually a comprehensive example before moving to the next topic. So first, we will create annual investment allowance column, then first year allowance column. I don't think so. We need a first year allowance column here in this question because there is nothing which we purchased as a zero emission rate car. So annual investment. After that, we can main pool column. Then there is a private use asset. Then there is a special rate pool, I guess. So first, we will draw that special rate pool. SRP, then private use asset, and we will write the business usage as well. And finally, we can make a column of allowances. So first of all, we have tax written down value brought forward for that. This is the 10,800 for main pool, and this is 16,600 for special rate pool. Okay. So let's go for the purchases. On 15th June, purchase a new office furniture for 898,000. So we will claim a new office furniture. First, write the new furniture for 898,800. So 898,800. We will claim annual investment allowance. The whole can be claimed 898,800. Another 8 is missing. So nothing will be left. All is included in the allowance column. That is called AIA. Right? We purchase that any? Yeah, we already have a very good point. We already have purchased some special rate pool assets. So first we will claim AIA against special rate pool items. So very good. So instead of claiming the AIA against new furniture, we will go for the installed 10th July purchases. Those because car do not qualify for AIA. So before car, we'll see that 40,000 is in the new water heating system, and 70,000 for lighting system. So water heating is 40,000 and new lighting system is 70,000. So we will claim the whole amount as AIA, which is 110,000. Right? So
What sir?
110,000 is claimed. Sorry?
Light system and water heating system are considered plant and under plant and machinery. Yes, sir.
They are not considered under plant and machinery. They are integral features of the building.
Special rate.
Yeah, lighting system and heating system is attached with the building. So that's why they are called integral features of the buildings. They are special rate pool items, but they will claim they will be claimed against AIA. So nothing will be written in the special rate pool. Okay. After that, we will claim AIA against the main pool items, which is we have purchased what? Office furniture. Office furniture for 898 800. We are left with 890,000 because 1 million is the AIA limit. Out of 1 million, we have already claimed 110,000. So we are left with 890,000. So maximum AIA we can claim is 890,000. Remaining is first write AIA 890,000 we claimed. Remaining value is 8,800. It will be added to into main pool. Right? So the remaining value will be added into main pool. Next, we have purchased a car with CO2 emission 114. It means it belongs to normally special rate pools, but as it has a private use, so we will write its separate column private use 12,600. So that is new car with private use. So we will add that into 12,600 into its own dedicated cost. And it's 20% is private, so it means business usage is 80%. Okay. Okay. Next, did we sell anything? Sold office equipment for 18,700. The cost was 28,000. So we'll take the lower one. So less disposal 18,700. So this is the value of all the columns. We have special rate pool 16,600. We have private use 12,600, and we have main pool value 10,800 plus 8,800 minus 18,700. Sorry, 900. 900. Okay, 900. Okay. Now we will claim WDA. So let's first claim 18% WDA on main pool. How much it is? 1,800, 900 into 18%. 162. But we will not claim this 18% because this is less than 1,000. So the whole will be claimed as, instead of 1,800, we will call it small pool WDA. The whole 900 will be claimed as allowance. So I will write 900 under allowances. Done. If it would have been more than 1,000, then we would have charged 18%. Now, on special rate pool, we will charge 6%. And on private use, we will also charge 6% because this also qualify for 6%. CO2 emission rate is for more than 50 grams. So both will be claimed as 6%. So how much is 6% for this? 996. So we'll add 996 into allowances column and 6% for 12,600. 756. But we will only take 80% of this into allowances column. How much? 605. So only 80% is claimed as allowance. Although we will deduct the whole amount from the car. But for the expense, we will claim only 80% because the car is reduced by 756, but only 605 relates to this. Remaining is for the private use. So that's why we will make this business use asset column as well. So there will be no balance for main pool. There will be some balance of special rate pool, and there will be some balance of the private use asset as well. Clear?
Sir, can you explain the business
Hold on,
usage
Rafi,
purpose
just
80%?
hold on. Rafi, hold on.
Yes, sir.
If it is 1,000 pound or less, we will claim the whole amount as allowance. That is called the WD. Where is 100? No, where is 1,000? That is limit. Means up to 1,000 balance is claimed as allowance. It is up to 1,000. So it's not like that the remaining 1,000 is limit still. No, it is done. If the balance would have been 1,100, it means we will only claim 18%. We cannot claim any small pool WD. It's not like that 1,000 claim as small pool and remaining 100 or 18%. No. It depends on how much balance of the pool is. If it is up to 1,000 pound, claim whole as balance. If it is above 1,000 pound, then charge 18%. Yes, Rafi, now your turn.
This business usage 18%, can you explain that part, sir?
Not 18, 80%.
80%, can you explain that part, sir?
It is written in the question that the car which you purchase, it has 20% private use. So simply what we have done, we have claimed 6% allowance. Why 6% allowance? Because the car CO2 emission is above 50 grams. So any car whose CO2 emission is above 50 grams, that relates to special rate pool. And special rate pool items are 6%. But it will not be included into special rate pool because it has some private use. So we'll have its own column, but allowance will remain 6%. So we'll charge 6% allowance, 756. And out of that 756, we will only add 80% into allowances column because only 80% relates to business usage. Okay, next heading is structural building structures and building allowance, SBA. Structures and building allowance. We call it SBA. So write this point, please. SBA are calculated at 3% per annum on straight line basis. Time apportioned as per length of accounting period. So altogether easy. Whatever the cost of the building is, for example, the cost of the building is 100,000. It has life of 10 years. So what we will do, 100,000 divided by 10. Each year we will claim 10,000 as SPA. This will also be part of capital allowances. We will add that. That's it. No further complication into anything like that. Okay. But if the accounting period is less than a month, less than a year, so 10,000 or 10% as it, sorry, not 10%, 3%, not 10%. It's not calculated on the life of the asset. It is calculated at 3% on straight line basis. So if the cost of the asset is 100,000, so we'll take 3% of 100,000. That is 3,000. Okay, if the cost is 10,000, so that is 3% means 300. So we'll take only 3% of whatever the cost of the building is, and we will claim that fixed amount each year as capital allowance. So whatever the allowance is, this is for the year. If the accounting period is less than a year, so we will apportion it accordingly, according to the number of months.